Hello and welcome to FountainFX on Monday the 27th of October 2014. Trust you've all had a good weekend. We are continuing to look at this trade on the US dollar Swiss franc that was planned out last Thursday, and as we can see, price is pushing down from where we entered. We did enter at the top of this point here based on previous order flow. We're looking at the daily chart at the moment. Key thing to note here is that the MACD is starting to push up, but we were expecting that in terms of for the pullback, and now price has turned and started to push down. We're seeing some decline or slowing down of this downwards pressure momentum measured on the MACD. And if we look on the daily chart, we can therefore see that price has pushed down, it's pulled back up into this previous area of supply or resistance, and it's started to push away from it again. Now that's expected in terms of trading like this. Now the thing is whether or not it's going to continue to push down, if we're going to get some momentum, and it's going to come all the way down to our target down here at the 0.94. Based where we're looking at today, we can see that there seems to be some buying pressure because there's a nice long wick forming below the body of the candlestick. As we can see, if we go back, Wednesday was a doji. Thursday was definitely a down day, so that was very nice. So we did trigger, we got in at the top here and price pushed down. Friday was pretty much flat. Today seems to have started as a down day, but it seems to be finding some buyers in the market. So we are up on this trade with 30 points in profit at the moment. If we go down into a smaller time frame, and we can see on the 4-hour chart, obviously very nicely, we had the area of support down here. We've got the area of resistance where price just fell quite rapidly from earlier this month, and it's off this that we've actually planned our trade to sell at, and price is now pushing quite nicely into our advantage. Now we want to see that continue, so we can place a trend line across the top just to use it as a form of measurement if we want to. Let's just see how we can adjust that. So running it across the top of the bodies of the candlesticks. So we've got that as a measurement. So if obviously this trend line does get broken, then it's showing that despite the fact that we were anticipating price to fall and to continue to fall back down to the origin of this area of support at the bottom, that's our target, it may not. So if it doesn't, we don't necessarily want to let price go all the way back up and just take a profitable trade and turn it into a loss. So we've still got our stop at the top. We could actually move our stop to this just above this previous high here, which can do that. That will reduce the level of risk that we have because price is actually moving in our favor. So we've done that, so we've reduced our risk. So now it's a case of see exactly how price continues to move. As I said, we're 30 points up, and we just want to manage this and watch it for the next few days. If it does break this trend line, then I would typically close the trade, take my profit. It might be so it's a failed trade, but it's still a profitable trade, and then look to see what price wants to do next. So we need to be always aware of that. Often the reason why traders don't actually make any money is because they expect the market to do exactly what they plan, and it very infrequently does that. So we've got a reason for taking the trade because of price action previously. Fell from this level down to there. It has found an area of supply or resistance at this point and has started to push down. But if it turns and it comes back up again, we need to be out of that trade and take the small amount of profit that we've been able to take, and then look to see where it wants to go then. It may be a case that there's a lot more buyers coming in the market, and it could push up all the way back up to this high and at the 0.96. So these are the things you need to be aware of when you're trading. The market is never textbook. If it was, everyone would be a millionaire, but it's not. So we have to be aware of these things and adjust our expectations according to how the market moves. And that's it from FountainFX today. Happy trading. We will catch you tomorrow. Have a good day. Bye-bye.